Hello, today is Tuesday, August 4th, 2026. Here is your daily signal. According to Bloomberg, consumer prices in India rose above the Reserve Bank of India's 4% inflation target for the first time in nearly 18 months in June 2026, as food and fuel costs surged. Over the last year and a half, India has maintained inflation within the RBI's target range, relying on monetary policy to stabilize prices. However, sustained price hikes have recently compelled Indian companies to announce fresh increases of their own products, and policymakers now face mounting pressure to manage inflation and protect household purchasing power. Factually, consumer prices jumped above the RBI's 4% target in June, with Indian firms announcing price hikes to offset surging input costs, which tests the future outlook for inflation. Key numbers show the Reserve Bank of India may raise interest rates soon to curb inflation and stabilize prices. Medium-term consequences include decreased consumer demand as product costs rise, a possible slowdown in economic growth, and persistent inflation that could undermine the central bank's credibility if targets continue to be missed. Moreover, companies may face ongoing pressure on their profit margins if these cost increases aren't fully passed to consumers. Next, let's look at the effect of global oil price shifts and company profits stemming from conflict in Iran. Fortune reports that oil giants such as Chevron and ExxonMobil posted near-record profits in the latest quarter, with Chevron reporting its largest quarterly profit ever as Iran's ongoing conflict squeezed oil supply. Tensions between Iran and its neighbors have escalated since mid-2026, impacting global energy supply routes and causing volatility in fuel prices worldwide. Iran is a major oil producer, and disruptions to its exports, whether from sanctions or military action, have triggered supply constraints and price surges beginning in July 2026. As a result, Chevron's profits soared and ExxonMobil's income surged sharply in the same period, both benefiting directly from the spike in global oil prices for fuel and transportation. Major oil companies took home record profits, underlining how geopolitical instability can rapidly translate to financial gains for market leaders. Consumers and industries face elevated fuel and transportation costs in the near term, and governments may release strategic oil reserves to stabilize prices. If supply disruptions persist, oil company profits are likely to remain high, while medium-term consequences could include renewed investments in alternative energy and major policy shifts by OPEC and regulators. Now, turning to a different kind of disruption, the economic shake-up caused by commodification of AI tools and open-source platforms. Next Big Future highlights how the commodification of advanced AI tools and platforms is shifting the economics of artificial intelligence. As open-source models like DeepSeek become practically indistinguishable from proprietary solutions for over 95% of queries, technology that is free and abundant sees its economic value diminish for providers much like tap water, which is essential but not an industry in itself. This democratization is reshaping both the tech landscape and business models. Traditional tech companies, which once monetized proprietary AI software, now face a threat from free, open-source alternatives that perform equally well for most use cases. On August 1, 2026, Next Big Future published that DeepSeek and similar platforms offer comparable results for most queries, and that commodification will shift value away from proprietary AI. The near-term impact will likely see traditional AI vendors losing revenue as clients move to free solutions. Medium-term, the focus may shift from basic AI tools to specialized value-added services and niche innovations as investment in proprietary development wanes. With consumer and business access to advanced AI improving, industry players will be forced to rethink their monetization strategies. Now, onto the markets. The S&P 500 climbed 1.8%, led by strength in the finance sector as XLF advanced nearly 1%. Semiconductor stocks surged, with SOX jumping over 6% and Marvell among the day's notable winners. Healthcare was almost flat today, while real estate edged down slightly despite steady performance from XLRE. International markets showed positive momentum. Germany saw a rebound with EWD up more than 1.5%, France extended gains with EWQ up nearly 1%, and Italy topped the group with EWI up 1.2%. Commodities were mixed. Gold rose over 1%, silver rallied by 3%, while U.S. oil dropped more than 5% as USO led the decline. Among individual stocks, Adobe moved higher with a 1% daily gain and Microsoft outperformed with a multi-week momentum spike. AMD jumped 8% on robust trading, while Amazon slipped nearly 2% despite strong month-over-month gains. Autonomix Medical soared more than 420%, marking the top gainer today. Next Technology Holding fell almost 70%, making it the most significant loser in the session. That's it for today. You can find more news and details on our website. Goodbye.